the investors are now starting to come to the conclusion that gold ain't going down. In fact, they're going to have to get used to the fact that it's going to keep going up. And that means these gold stocks and these silver stocks are screaming buys. And that's why the smart money is just finally moving into the market. I continue to strongly recommend. I think the consolidation is coming near an end on this $3,300, $3,400 gold. It's going to break out. I think we're headed towards 4,000, maybe by the end of the year. Silver, once it breaks through 40, it's been hanging out around 38, 37 and a half, 38 and a half. Once it got above 39, but once it clears out 40, it makes dollar went down, bonds went down, gold was down a little bit. Silver was up, right? Gold was down about 0.5% on the week, but silver was up about a third of a percent. Not a big move, but it didn't get killed. It went up. But what was more encouraging to me was the action in the mining stocks, because both the GDX and the GDXJ hit new 52-week highs this week. In fact, the GDXJ hit a new 52-week high on Friday. The GDX didn't do that, but the GDXJ now caught up. It was lagging, and now it's caught up. Both of those indexes are up 65% on the year, right? This is the best performing sector in the Trump economy, are gold and silver mining stocks. Now, you wouldn't know that if you just listened to like a CNBC or something. They barely talk about these stocks, right? They want to talk, let's talk about Bitcoin. Yeah, Bitcoin isn't up anywhere near this much. I mean, it's up maybe 23%. It's not even up as much as gold, but it's getting killed by gold mining stocks, silver mining stocks. Why not talk about those? But, what I was watching this week that was very encouraging is every time a gold stock got sold off on earnings, right, which they've been doing this for years now, whatever the earnings are, just sell, right? That's like the programs are there, the algorithms. Anytime a gold stock comes out with earnings, just sell it, right? Well, they still sold them, but they immediately were bought back, right? The rallies, big drops, 10% drops, come back, right? Maybe it takes a day or two, three, but the market brings it back because buyers are now waiting in the wings to scoop these stocks up, right? You have big money, sophisticated money. For years and years, Wall Street never had any confidence in the gold rally, continued to expect the price of gold to crash. And so they never bought these stocks, because gold stocks, when you're buying gold stocks, you are buying the future earnings stream of these gold mining companies. And if you have no confidence in future earnings because you expect the gold price to crash in the future, well, you're not going to pay up for these stocks. But I think the investors are now starting to come to the conclusion that gold ain't going down. In fact, they're going to have to get used to the fact that it's going to keep going up. And that means these gold stocks and these silver stocks are screaming buys. And that's why the smart money is just finally moving into the market. This has got a long way to go. The public is still asleep. They're not buying these stocks. My clients are, obviously, but most of the clients don't get my advice. They don't watch my podcast. They don't have accounts with me. They don't own my funds, and they're not in on this. But again, I continue to strongly recommend. I think the consolidation is coming near an end on this $3,300, $3,400 gold. It's going to break out. I think we're headed towards 4,000, maybe by the end of the year. Silver, once it breaks through 40, it's been hanging out around 38, 37 and a half, 38 and a half. Once it got above 39, but once it clears out 40, it makes a beeline for $50. So you want to get your gold and silver. In fact, we got, our website. We totally revamped the Schiff Gold website for the online shopping experience. You got to try it out. It's very seamless. You can load up your shopping cart. Of course, we still got our specialists to give you the personal touch. If you just don't want to, buy interpersonally, on your computer screen, if you want somebody to, to hold your hand and take you through the process, we got the best hand holders out there, and they are not going to steer you in the wrong direction. I was watching this infomercial on Fox Business the other day, and this company is out there trying to get people to buy these little teeny bars of gold that are like a half a gram, but there's like $50 worth of gold there, and they're charging $80 for it. So you need gold to go to 550 to break even. Plus, you had to pay the shipping and handling. And then they were selling silver $half, Kennedy $half, but not the silver ones from pre-1964, but the normal ones that are made, of copper clad, whatever. They're not worth much more than the face value, and they're selling these things at these more at almost triple. So they're basically selling a 50 cents for $1.25, right? But people are dumb enough to buy this stuff because of the way that they market it. In fact, this company does sell legitimate products too. I went to their website to see what they were selling, like a 1-ounce maple leaf for, and it was like $300 more than you could buy the exact same coin on Schiff Gold. So there's a lot of ripoffs out there, unfortunately, in this space. That's why you want to stay with somebody that you trust. So you want to get on the Schiff Gold site and buy some gold and silver. But if you want to take some risks, the Euro Pacific Gold Fund, EPGIX, right? I keep, get that symbol wrong a lot, but that's the no load version. But, our fund is actually only up about 60. Oh, no, wait a minute. I thought the GDX, I think we're up more than 65% on the year. Maybe it's 70%. Because I thought we were lagging because my fund's up about 63, 64. Maybe those numbers are wrong. Maybe it's 70% on the year on the GDX. I gotta double check, but this is live, so I can't do it. But in any event, it's either that or higher. But the reason that my fund is not over 70% is because we got a lot of the real small stocks in there that have weighed us down. But I think that weight is going to become the reason that I believe we're going to outperform significantly. Because I think when more money starts to come into this sector, right now they're focusing on the big names. In fact, the data that we got this week proves what I've been saying, that the Fed should be hiking, that the conversation should not be about when is the Fed going to cut, but when is the Fed going to hike, because rates are too low. That's why the inflation fire is coming roaring back. Now, before we got the really bad news on producer prices, we got news that the markets actually celebrated on consumer prices. We got the July CPI that came out earlier in the week. And the reason people celebrated is that it wasn't worse than expected, right? That's how low the bar is on inflation. So the consensus was an increase of 0.2, and the increase was 0.2. So not worse than expected. And the year over year increase, which people were worried was going to go up to 2.8, held steady at 2.7. And so that was considered, hey, this is great news. The Fed can cut. Well, why? 2.7, that's 0.7 above 2. The target is 2, not 2.7. When inflation was 1.5 and 1.6, they had rates at 0. They were doing QE because we were so far below 2. Well, at 2.7, we're more above 2 now than we were below 2 then. And at that point, it was an emergency. We needed QE. We needed 0% rates. Oh, my God. We're 0.4 of a percentage point below our target. Well, we're 0.7 above it now. So why are they cutting? Why aren't they equally as vigilant? Oh, we better hike rates. Look, we're way above target, right? And look at the core. The core is even worse. The core rose 0.3, which was expected, but that was worse than the prior month, which was 0.2. So the core is going in the wrong direction, and the year-over-year core, which was expected to come in at 3%, came in at 3.1, which was hotter than the 2.9 from the prior month. So supposedly core CPI is even more important than headline, right? The Fed wants core CPI to be 2%. Well, now it's got a 3 handle on it. What does that mean? The Fed is too easy, right? But somehow the markets looked at this, and because it wasn't even worse, they concluded, aha, this proves that there's no inflation. This proves that the tariffs aren't, being passed on to consumers. So the Fed is all wrong. Powell's a complete idiot and a moron. He should be cutting rates, right? That was the conclusion. So the market celebrated, on that one. But the rug got pulled out from under that celebration when we got the PPI numbers, which were a shocker. They were even worse than what I was expecting. But anyway, so the number for July was supposed to come out at 0.2 on the month. And that would have been hotter than the 0%